Hi, Mr. Zhang. Thank you for joining us today.
Good morning,
Hi,
Frank.
good morning.
Good evening.
Yeah.
Yeah.
Good evening to Frank.
Good morning. Good morning to you all.
Yeah. So let me start. Let me ask a question first. So going through the pandemic, what do you think about the development trend of real estate market in China now?
David, as you know, during the pandemic, many countries, the property price goes up. The reason is inflation. In China, I think last 1.5 years, property price also has been gone up. But government try to control the price. We issued some new policies to control the price. The reason Chinese people still like to buy property, another reason is the stock market has been now going well for last 2-3 decades, I think, in China. So Chinese people still prefer to buy property. Another reason is in worldwide, household residential property has been seen as an investment hedging against inflation. So as the same in China.
I understand you are running a, program where do you teach is real property developer in China, right?
Yes. Started 2 years ago, I put my program in WeChat, real estate program, especially from early last year to now about 20 months. Yeah, about 18 to 20 months. So I sell in WeChat. But mainly in Chinese, yeah.
I see.
Yeah, I know this program is very popular. I think hundreds of students from maybe over 50 companies participated in this program and really appreciated what Mr. Zhang has taught.
Yeah, accumulatedly, David, Frank, now 30,000 buyers from my program, 30,000 buyers.
Wow, that's tremendous. 30,000 people purchased the program.
Yeah, 30,000 have accumulated in the WeChat. Really buy the program.
Yeah, so Mr. Zhang is using the new technology to teach the students, practitioners in this industry through WeChat. Yeah, so this is effective.
David,
Yes.
Franca, you know why? China economic, everything has been developed so fast for last 20 years. Some universities do not have qualified lecturer to teacher.
Yes.
So this is create some opportunity for as a professional to lecture. For example, private equity, REITs. So even professor, very famous professor in university, they did not touch they don't know before. So
yeah, they don't have a real world experience. I can imagine.
Yeah, because many things are quite new, right? And even the professors may not have the knowledge, updated knowledge about this industry.
Yes.
Yeah. And we know the recent development is a REITs development in China. I think that started about a few months ago, right? So there was very little information about REITs development in China. We would like to learn a little bit more from you, from your updated research.
Okay, it's a good question. I can talk about REITs for 10 hours, but I want to give some inside message to you guys.
Wow, fantastic.
China's first batch of publicly traded real estate investment trust began trend in 21st last year, 21st June. 9 infrastructure REITs. In China, we are focused on infrastructure, so-called infrastructure REITs. 9 REITs, 5 in Shanghai Stock Exchange. Just write it. 5 Shanghai Stock Exchange. 5, 4 in Shenzhen. So totally 9. These 9 REITs are focused in infrastructure such as highway, industrial park, storage and logistics, and green power. Please note, in US and Australia and the UK, they are quite focused on shopping center, office, hotels, but not in China. As I mentioned, first batch of public traded real estate investment trust, not focus, cannot do shopping center, office, and hotel. Focus on infrastructure. Do I make it clear?
Right? Yeah. Okay. Yeah. So we understood that the total market cap of REITs in the United States may have already reached $2 trillion, or close to $2 trillion, right? Which is a huge market.
Yes.
But the development of REITs in China have been discussed for decades, as I know, right? Yeah, it was discussed for a long time. People say that it will be launched soon, but it didn't launch until middle of last year, right? The REITs were the underlying assets of the REITs were infrastructure projects, not the office, not hotels, not the traditional residential properties, correct?
Yes. As you said, in China, only we start from $4 billion until today. Value of 9 public REITs asset value is $9 billion, very small. $4 billion.
Yeah, although the market cap at this current stage is $4 billion, it has a potential to grow.
Of course.
Yeah. And Mr. Zhang, what about the performance of the REITs after their listing?
I believe the first batch public REITs, the underlying assets are relatively high quality, good quality project, and expected the cash flow distribution rate is above 4%. Not bad. Cash flow distribution rate is 4%. Performance is very stable. Performance, but I think is quite good to people to buy, because 1 year you will have 4% of cash flow distribution rate. Yeah. So current performance is very stable.
Yeah, that's good. And David, you might heard about the REITs listed
of course.
in Hong Kong, right? In Hong Kong, Mr. Zhang also knows about that. The price of the REITs with underlying assets in China has a better valuation than the REITs which have underlying assets in Hong Kong, as I learned. The PB ratio is higher for those in China. with assets in China. I'm not sure if it is the same case. Do you have the numbers related to price to book, PB ratio, etc.? But Mr. Zhang has told us about the dividend distribution rate, which is about 4%. I think it's reasonably very healthy.
Yes.
But please note, because this line is the first batch of public REITs, also the market value only $4 billion. These 9 REITs must be performed well or not bad. Otherwise, they will lost to more opportunity in late future. So I think they try to perform well.
Yeah, that's very true. Because if the performance of these REITs are not satisfactory, it will be difficult to develop the REITs market in China overall, right? So this is the very important tests.
Right.
Yeah.
Exactly.
Yeah. So, Mr. Zhang, besides the REITs, this type of fundraising mechanism, what are the popular ways of financing for real estate development projects in China?
Of course, the bank loan. In China, the bank loan is about 70% of real estate finance. The bank loan, 70% of real estate finance. The rest are company bond, private equity, property trust, extra. So, in fact, recent 1 and 2 years, Chinese real estate company, they had difficulty in borrow money from bank and issue a company bond. Government try to control avoid the expand too fast. Government don't want a company or the economic to rely on the property.
Yeah, I understand that the property market in China has been perceived overheated in the past years, right? In order to slow down the development of the real estate industry a little bit, the bank financing, there have been more restrictions related to bank financing, right? So it's more difficult for these developers to get funding. But how to solve this problem? What is your view about this? Do you think they will slow down, or some of the smaller real estate developers will exit the market?
This is a bigger question, also a good question. In fact, China now may one day do not need so many developers. We need more also focus on existing buildings management. So this is Shanghai, Lujiazui, okay, Shanghai. You see, you cannot see crime. You cannot see crime. Office, hotel, shopping center. So in China, especially Shanghai, Beijing, Shenzhen, more like Hong Kong and New York, we need focus on property management, asset management, not only build. We also need focus on called the urban redevelopment, urban renewal. So it's not simply like last 2 decades, build. Now we need build, manage, asset manage. Frank.
Yeah. So I understand. Yeah. So there will be more urban redevelopment projects in big cities, right? And also the property management of the existing inventories will become more important, right? In the past, it was new developments, but now these, yeah.
Yes, because today's interview is in English, so I would say this also create opportunities for international company, international private equity company, international asset management company. Also, if they want to involve China real estate business, they should have more focus on property management, asset management.
Yeah, and I heard that many famous international real estate investment funds have already acquired some assets in China already, especially in large cities like Shanghai and Beijing, right? I heard that Blackstone is in the process of acquiring some assets or shares of some large companies that own a lot of real estate projects in China. So things like that are really happening in the market, correct?
Yeah, especially I think they are quite interesting in logistic warehouse.
Yeah, logistics, correct.
For example,
yeah. And also office, right? Office, hotels.
I think from last year, as you know, I heard the radio say that even in Sydney and in Australia, the logistic warehouse are very hot spots from last year. Office and the retail, they are also quite interesting. Not hotel. Hotel, the liquidation is not quite good. Hotel. Cash flow not too good.
Yeah, I have a question. I think the major barriers for the development of REITs products in China with underlying assets in office or hotels or residential sectors is that the return is relatively low, right? Because in China, these assets have lower cap rate or rental yield, right? So it's difficult to launch REITs products because the rental income is not high enough. But the infrastructure projects may provide more steady and satisfactory cash return. So that is what is happening right now. But my question is, do you think in the future there will be more and more investments from overseas on the residential, office, and commercial sectors, and also whether there will be more developments in REITs products with underlying assets in the office, residential, logistics industries?
Frank, I think international companies, they has been in China in real estate market more than 20 years. They always here, and whether they invest in REITs, invest in office, logistics, it depends on the business situation. So 4 or 5 years, they are like invest in more in office in a shopping center. But now, I think first priority for them, I think is first is logistics. Second is office. It depends on market situation. And who knows? Maybe after 3 years, office will become to number one. So it depends on the marketing situation.
Market trend, right?
Yeah.
Market trend. How about the domestic Chinese investor? Are they still? We have seen that a lot of Chinese investor who made investment in the real property overseas. So, still, do you have the same trend? Chinese investor interested overseas investment opportunity, real property?
Yeah, I think Chinese people like property. Also, they like some people, some Chinese people like buy in overseas. But the transaction is very limited. Uh, I think two reasons. First is they hardly get money out of China.
Yes.
Secondly is COVID-19
Yes.
situation. So I think two reasons.
Yes. So now quite difficult for them to make an active investment overseas market.
Yes, many Chinese they buy overseas because their kids study, for example, in New York, in London, maybe in Sydney. So they they cannot study. If they cannot study in overseas, so of course they buy less. As I know, in Sydney, uh, downtown, many apartment the rental has been gone down 10 to 20% because now many overseas students to study in Sydney.
Thank you so much taking time to introduce the real property market in China and then trend, how it evolve at the moment. Thank you so much.
Thank you, David. Thank you, Frank.
Thank you.
Okay.
Thank you.
Thank you.
Talk to you later.